stock of the day, Fisher and Paykel. All right, I chose this one today because it's, shares are really getting hit. It's actually one of the worst performers today, down by 4.3% as we talked just after the noon hour here in Sydney. So it has seen both a decline in profit and revenue for the FY23 year. Total profit after tax fell 34% to New Zealand 250.3 million, and operating revenue was down 6%. The group said market conditions are progressing to a more normal state after 3 financial years impacted by the COVID-19 pandemic. Interesting one, guys, because I was reading a note from Citi yesterday. Didn't Fisher and Paykel upgrade back in January? So they're saying, that they upgraded guidance for the year back in January. So perhaps that's why we're seeing, such disappointment in market.
Yeah, it was. I think we had this about a month ago. Phillip and I had this same stock together on the call. So, and I think we both said hold or sell. So because it was getting pretty expensive, and look, the second half results they're not too bad. The first half, and then look it. And it had a really significant rally from November. It's come from $16, it got up to like 26. But I think when we were discussing, it was a PE of around about 70, and we both felt it was pretty expensive. I'd sort of got out my clients out the prior week, which was around that $25 mark, and we're just waiting for the next time they update. They haven't seemed to have found someone who can work PowerPoint. It's like the really dense document that's like really hard to read. I'm a bit wary of some companies that use too many infographics, but one would be nice instead of having to churn through. But it's pretty dry reading. But they're and very little sort of very little outlook. It's quite a clinical sort of update. So the full year results not so good, but I think that's just it. I mean, it had an extraordinary rally. It's essentially almost rallied 50% out of its lows last year, like at the end, like November, December last year. So. And they've got they're having an investor presentation. They've got their Mexican operation, which is going to, obviously a lot of their business goes into the US, but having the manufacturing in Mexico is going to reduce a lot of their what used to be supply chain issues, but transport costs and things, because most of their stuff gets sold into the US. So, I would say at the moment, I'd be looking at it maybe towards the $20 mark, because healthcare obviously does pretty well in the environment we're coming up to, just pretty solid quality business. I'm pretty thankful to have sold out when it got a bit expensive, and maybe the PE back around between 40 and 50 is sort of where it is mid-range, and go from there.
What do you think, Phillip?
Look, it had a good run into the result, and I think analysts were expecting an even greater FY24. I think FY23 was there or thereabouts, maybe a slight miss versus consensus on the second half. But the outlook statement for FY24 is disappointed. Mainly, it looks to me like at the gross profit level, just the costs are higher. So revenue, basically in line with what analysts were thinking, it's just costing them to deliver. So you'll probably see consensus forecasts come down for FY24 in what was a stock that was priced, not for perfection, but priced for growth. And the market doesn't like a downgrade. So I think what you're seeing today is people saying, well, it's hard for stocks who are downgrading to outperform. So people are taking profits or just trading out of something that's more reasonably priced. So it's probably going to struggle for the next few days while people reweight. Although it looks fair value versus current consensus, you'll probably see valuations come down the next 24 to 48 hours and share price follow that down, after which it probably stabilises for a while.
Yeah, in broader weakness, we probably bought a little bit too early about a year ago or so, and we were sort of scaling it on the way down, and I can tell you that stock gets pretty scary to the downside when there's broader market weakness sometimes. I was really surprised how much it was able just to head down. So I'd probably recommend, if you're liking the stock, you just probably get in increments rather than trying to pick a price and you're either right or you're wrong, because it can trade outside of fair value on both sides of the scale. So you may end up getting it cheaper and or a lot cheaper sometimes. It was that move down to 16 last year was quite frightening, from about $28 or something in a very short period of time.
So you would not be buying it. You'd wait for it to get cheaper.
Wouldn't buy it today. I'll
Okay.
sit on my hands.
All right, let's get on to the list.